Let's bring in Chris Conway from Australian Stock Report for more on what's really driving investor sentiment today and some of these local movers. Chris, good to see you. He's in our Melbourne studio. So, Chris, firstly, what do you see is it really the drivers of the market in general coming from the United States?
Good afternoon, Helen. Look, I think the strength today is there's a few question marks over it. So, we didn't see a particularly strong session in the US overnight. It was a middling session with US markets closed relatively flat. And there was, a lot of push-pull factors in play, Trump and China, bond yields, things like that, with the yields creeping back up towards 3%. So there was a lot of push-pull factors. We didn't get a lot of directional movement, and on the whole, I think you would say commodities were weaker. You pointed to that in the rundown as to why materials were down today, but it's really the rest of the market that is doing well, and in particular, the banks have probably bounced back a little bit from a recent tough period surrounding the events of the Royal Commission. So yeah, look, I wasn't expecting this today with the flat leads, and especially ahead of what is a public holiday tomorrow, of course, for Anzac Day.
Yeah, well, we've also, out of the United States, we've got this really interesting thing happening in the bond market with bond yields and the stock market as well. We've got earnings season there. How do you see that kind of coming together and impacting both their markets and ours?
So I read some quite poignant research recently, Helen. It was in regards to the bond yield, the rising bond yields, and everyone seems to have this magical 3% number in their mind. I think we finished at 2.98% overnight on the yield for the 10-year. But some research recently shows that, that tipping point where investors will move away from one asset class and into the other, it doesn't really occur until bond yields get up to around 5%. Now, this is research that was done on the US market, and it shows that since 1996, of 11 periods of rising interest rates in the US, every single time stock markets were able to rise as yields rose as well. As I said, until it gets to about the 5% mark, and that's when the relationship diverges rather than moving in unison. So, like I said at the top, it seems like everyone's so concerned about this 3% mark when the research and the data shows that we probably needn't be concerned, and that equities can rise along with rates at the same time up to a certain point. And of course, we're a very, very long way from US rates being anywhere around the 5% mark.
Yeah, exactly. Let's move on to some specific sort of stocks happening in our market today. Of course, FMG, we saw their quarterly production. Their shipments were down 2%, and after doing such a great job on their costs, they've crept up again. How did you see the FMG, those production notes that we got today?
I agree with you wholeheartedly, Helen. They had been, the shining light of reducing costs of iron ore producers here in Australia. They really had been best of breed, and they had, consecutive periods of really slashing those costs and being a market leader. Of course, they were up 9% in the recent quarter. It was interesting to hear the interview. I was leaving for the studio, but I did hear the early parts of it. From the CEO, I think it was, talking about some of the factors that attributed to those rising costs. So one, of course, was fuel prices. We all know that oil prices have gone through the roof. And the other was, of course, some currency movements as well. So it seems like they still continue to control what they can control. And there's some external factors, some externalities that are impacting on those costs.
All right. Well, just before we continue, Chris, I'll just, we spoke to the Chief Executive on Sky News Business a little earlier of Fortescue Metals, Elizabeth Gaines. She was pretty bullish on the next quarter. Let's have a listen to what she had to say.
We've retained our status as the lowest cost producer of iron ore globally, and that's incredibly important because we continue to generate those very strong margins. Our fourth quarter is always our strongest quarter, again, better weather conditions, so we're going into our fourth quarter knowing that we have the capacity to achieve our guidance of 170 million tonnes.
Chris, obviously she's going to be very bullish, but, nonetheless, was it disappointing to you that their discount to the benchmark iron ore has actually expanded? Is that correct?
Yeah, I think in the interview she was talking about how it has narrowed slightly, the discount to the benchmark from what was previously a wider position, but it's only narrowed very slightly. But Look, I guess the bottom line for me as an analyst and a trader is, do I buy Fortescue over a BHP or a Rio Tinto?
Yeah, and
which
what's
obviously
your
has
feeling?
the higher iron ore grades. And the answer is no, unfortunately I can't. That relationship will change over time, and indeed that difference in the price may narrow, or alternatively it may widen. But it's just an added risk that I don't think you need to take on board when, as I said, you can buy a BHP or a Rio.
Yeah, all right. Well, let's talk about another stock that's gave the market some information today, trading update, and it's really been marked down, and that's Boral. Now, their North American operations have really fallen sort of below expectations. How does this happen, Chris, when we know many parts of North America, the economy there has been doing pretty well?
Well, it's a very good question, Helen. The company itself put it down to weather. Longer rain periods, particularly
in Texas
and the Midwest. And look, Boral don't have a history of doing the wrong thing or missing guidance without a good reason. So you've got to let them have this one, if you will.
All right.
Look, we think this is, again, it's a transitory factor. You look at the makeup of where their revenues come from. 25% comes from the US, 75% here in Australia. It's a 10% markdown for a missed target. In an area of their business that only accounts for a quarter of their revenue. So we think it's a little bit of an overreaction. We think Boral stands to benefit from infrastructure spend here in Australia, and that'll transition to the US over the next 5 years if Trump finally gets his infrastructure bills off the ground. So we think long term, this is probably a buying opportunity. We think the markdown is an overreaction.
Yeah. All right. Let's have a talk about some of the stocks you do like or that you're holding. Now, you've sort of nominated Link. How are you seeing Link?
So always we're looking for a catalyst, Helen. Anytime we're looking for a stock, I'm more of a trader than a long-term investor. And the catalyst for this one recently was the acquiring of the UK Share Services Administration business, Capita, for $1.5 billion. They've carved out, or they thought they were going to carve out around $25 million worth of synergies. They've already increased that. They're looking to expand that. They've recently done a capital raising to reduce debt, so they are in a really good position to acquire more like businesses as bolt-ons to increase scale. But also we're in sort of a rich environment at the moment where there's a lot of corporate actions, and there's potential mergers and acquisitions activity as well that will drive revenue for Link.
All right. Well, so, sorry, that is one you like. And did you say you think the rising bond yields will actually be favourable to it?
Yeah, absolutely. So obviously they hold client funds when they're doing, so capital raises and things like that. And of course they'll earn a better yield on all those funds that they hold whilst they're holding it for clients.
All right. Chris Conway from Australian Stock Report. Thanks so much for joining us.
Thanks, Helen.